Good afternoon from Los Angeles. It's Alyssa Quorum and Justin Nielsen here with a look at the stock market today. And on today's show, we're going to be taking a look at Microsoft as well as Xilinx and 3M. So some interesting action to dissect today.
A lot of earnings action.
Oh yeah, that's right. But first, let's talk about the major indexes. We had the Nasdaq finishing up 0.2%, lifted by the likes of Microsoft and Facebook, while the Dow finished down about 0.5%, the S&P 500 down a smidge, and the Russell down about 0.7% for the day. So tech stocks are looking pretty good, but what about under the surface?
Yeah, that's the thing is, the Nasdaq was tracking higher. Everyone's kind of talking about, oh, it's a record close. And it's great that the Nasdaq was able to get above that 8133 area from the summer. Again, great. But what was really being masked is that Facebook and Microsoft, both of those together have a 10% weighting of the Nasdaq composite.
Right.
And so if you take just those alone, they were worth like almost 0.5% by themselves. So the fact that everything else dragged those two stocks down really kind of masked what was happening underneath the surface. If you look at FFTY, that was down considerably. It was down like 0.7%.
So a look at growth stocks.
Growth stocks, exactly. So if you're like, wait a minute, the Nasdaq was up, why does my portfolio look like this? Have all this red? There was a lot of weakness in growth stocks, and the Russell 2000, as you mentioned, that was down. Weakness in chips,
yes.
IT, defense, healthcare. I mean, it was kind of across the board. So you take those big cap names, Facebook and Microsoft, out of the equation, and you're looking at a very different picture of how strong the day was.
Yeah, well, we'll get into a few of the big or notable moves today and perhaps how investors could have played them or how they should adjust their portfolios accordingly. So first, let's start the day off with Microsoft, which gained 3.3% in above average volume on its earnings report. It did close off of that intraday high there towards the bottom end of the range, but it was still a big gap up, and the report showed accelerating growth on the top and bottom lines, which is pretty notable for such a big tech stock.
Right, and obviously that's something that investors really liked. The fact is, the FANG stocks, the big caps, I mean, they have been getting attention. So of course, Microsoft isn't,
a FANG.
one of the letters in there.
Yeah.
The M doesn't really match in there, but it's one of the strong stocks where a lot of investors, especially institutional investors, are probably putting their money right now. We saw, a lot of growth in Facebook, Amazon, Netflix. So these have been really garnering attention, and so it's no surprise that Microsoft was among them. Now, if you look at this, the MarketSmith chart shows a buy point of 108 back, a little bit after its last earnings report.
That's right. So this was a can slim trade here.
Sure, and you had a 20% gain from that, and so that's that green area that you see on the chart. So this is an area where we like to take profits a lot of times, and there's nothing wrong with taking. Hey, you got a good earnings report. You had cushion going into the earnings, so you were able to kind of take the benefit of this 3% move in Microsoft. And you might take profits at this point. If you wanted to hold on for a little bit longer, maybe it fills in the gap, but there's nothing wrong with taking profits right now.
Exactly. Nothing wrong with selling into strength.
Yeah.
And as you mentioned, we'll have to keep an eye to see where it goes from here, because it is now well above its 50-day moving average.
And if you look historically, this is beyond its normal range of how extended it is above its 50-day moving average. So
that's something to know when you're looking to take profits.
Absolutely. And again, if this were something that had just broken out of like a base, but it was already extended out of its last base, now it's extended even more.
That's right. And Xilinx was well extended heading into its quarterly report, and unfortunately it disappointed and fell some 17% on the results. A pretty heavy volume here, so flashing a sell signal. With it being so far extended from its last proper buy point on the last earnings gap up, what was the thought heading into this report, how it should be handled?
Yeah, so we put this on leaderboard after that last earnings report, and we got an entry of 102.50. So we had a lot of cushion going into this, and yesterday looked strong. When you have cushion like that, it's okay to hold through earnings, because even if it's bad, you can probably still get away with a profit. So once we saw the earnings report come out and it missed, and things weren't looking great, we also look at the action of the stock itself. That wasn't great. So we took this off leaderboard, and the reason being, we wanted to book the profit that we had. We took it off.
Which was still a considerable profit.
Yeah, we took it off at 118. So you're talking about 16% profit, 15% profit. That's decent for a quarter. So we took it off. Now it went down even more from there. So it closed below 116. So that's one of those things where you don't necessarily want to wait. Yeah, exactly.
Right. When you see that sell signal.
Yeah. Maybe it'll come back, but maybe it won't. Maybe it'll get worse. And this was a slice below the 50-day moving average. This is now slicing beneath the 10-week moving average. If you're looking at a weekly chart, huge volume, even more volume than it had on the gap up from the last earnings report. That's just, everything says sell.
And hey, with it being earnings season, this just means that you can start putting your capital to work somewhere else.
Yes, exactly. Move that 15% gain here. Let me move it into something else that might be able to get me a 15% gain or even better. Not something that, I hope it comes back and gets me back to the price I was at.
That's right. And also, depending on your risk tolerance heading into this report, going back to our Microsoft example a little bit, when you see that profit-taking zone, nothing wrong with selling into strength either.
Yeah, exactly. Now, we also had ServiceNow. We had a full position on ServiceNow on leaderboard. We took half off ahead of the earnings because, what? We're going to book some. So, there's a lot of ways to play it.
Right.
But the big thing is you want to have some cushion before that earnings report. Otherwise, something comes down 17%, and you don't want that to be taking away your capital.
Yes, definitely. All right. Well, shifting gears here a little bit, blue chip stocks thought of as those slower movers.
Right, or safe. That's that word I hate.
Right.
There's no such thing as a safe stock.
Exactly. Always some level of risk, but 3M definitely showed us today that even blue chip stocks aren't immune to those big earnings declines. It fell some 13% today. Its biggest daily loss in decades, and just a big gap down here for the stock.
And it's not like this was showing huge strength ahead of time anyway.
Exactly.
So this was something that it had a 69 EPS rating.
Right.
So it's fundamentals
and the chart action.
Yeah, exactly. Yeah. So this is not something that was really on our radar in terms of something we'd be interested in as a growth name. But for those people that kind of look at it and say, oh, let me put my money into something that's safe, a blue chip, that a slower mover.
Right.
Well, guess what? They can go down just as easily. And if you didn't learn that lesson in 2008, when the financial crisis hit, and companies that had been around for hundreds of years, went belly up, this is just a good reminder that there's no such thing as a safe stock.
It is. All right. Well, some great reminders today how to handle trades around earnings season. And for more of that, Justin, you were on the podcast this week with Chris talking all about our earnings option strategy, which, hey, for some of these gap downs that we talked about today, this can help you there.
Yeah, it definitely makes it so that you can participate in the upside while capping your risk. And that's the big thing. You don't want to have a huge risk going into earnings without a cushion. So an option strategy is something that can be used to kind of get stock, but also cap your risk.
That's right. So for all of the details on IBD's earnings option strategy, make sure you tune into the podcast. We have a new episode that drops every Thursday, the Investing with IBD podcast, and everyone can head to investors.com/podcast for more, and you can listen to it on your podcast listening platform of choice. So the new episode is out now.
And I'm going to plug episode 6 too, because we're still in earnings season, and they were talking about breakaway gaps. That's important. So it's worth listening to both. Exactly.
I like that thought. All right, everyone. Thanks so much for joining us today. Make sure you're heading to investors.com for all the latest stock market news and analysis. And hey, it is earnings season, and Amazon's quarterly report came out after the bell, and it's kind of waffling after hours, up fractionally. We'll have to see how it acts tomorrow.
Yeah. Sometimes the futures, the after hours, doesn't really tell you what's going to happen the next day. So we'll see how it opens tomorrow.
Yeah, we'll keep our eyes peeled for that. You can also check out our content across social media, whether it's on Facebook, Instagram, YouTube, or Twitter. Follow and subscribe for all the latest. Thanks for watching, everyone, and we'll see you back here tomorrow.